Happy December 23rd, also known as Festivus, one of those great Seinfeld episodes of Days Gone By, or for Elf, Happy Christmas Eve Eve. We're having a great time. We're getting an offer submitted and hopefully accepted today for one of our borrowers. We're going to have a clear to close on a Michigan loan for another borrower and look to get that wrapped up by the end of the year. So activity is still very, very positive in the market. So wanted to go over some things from yesterday and today. We got real busy yesterday, couldn't do a video. The market had some surprise information today. What we got was a much stronger than expected Q3 GDP report. Now, usually there's multiple quarterly GDP reports. This time, because of the shutdown, we're only getting the preliminary reading, which showed that the U.S. economy grew at a 4.3% annualized pace in the third quarter. This was much stronger than the market planned on, of 3.3%, and better than the Q2 number of 3.8%. Now, when we look at what GDP is, it is a composite of consumption plus investment plus government spending plus the sum total of exports minus imports. Now, part of the reason for the better than expected figures was a rush to purchase EVs before the government tax credit expired at the end of quarter three. Additionally, there was an increase in defense spending, and the trade imbalance had improved somewhat due to the tariffs that are currently in place. Now, what did this do? This did pressure bonds, the yields higher and prices lower, which did not help mortgage rates. Now, there is also within this report a quarterly PCE component, which showed headline quarterly inflation rose 2.1 to 2.8%, and core rose 2.6 to 2.9%. Now, some of this is dated information, so I don't really think it's going to affect the monthly PCE report negatively going forward. I think we're going to get some positive movement on the PCE numbers, the monthly numbers going forward. Now, durable goods orders was additionally stronger than expected. Now, when we look past the headline for the October report, the headline figure was weaker, down 2.2%, and even less than the 1.5% decline that the market had planned. But this report is heavily influenced by aircraft and defense spending. When we strip those out and look at the core durable goods report, that showed an increase of 0.5%, which was better than the expected 0.2%. Core shipments, which get plugged into GDP, also was stronger than the estimates, coming in at up 0.7% versus market expectations, up 0.3%. So this did also put secondary pressure on the bond market because it came in better than expected. ADP came out with their weekly employment data showing that on average, the 4 weeks ending December 6th showed 11,500 jobs created per week. That would be equate to 50,000 jobs per month. Now, that is not fantastic, but it is better than the negative numbers that we had been getting not too long ago. When we talk about jobs, we talk about the birth to death model, the BLS numbers. What we want to talk about is what was reported yesterday in the quarterly census and earnings and wage report, or QCEW. And man, was it a bigger than expected negative number. It's just amazing how inaccurate this is. Let's talk about this. Now, the main reason for this error, this continuing bad reporting on jobs, is in the birth death model in the BLS report. Now, that's their process to calculate how many small business jobs were created or lost, but they just do a very poor job at it because they don't get the actual numbers. They have to do the methodology, which is in this birth death model. It's been severely skewed the last multiple years. It's not a new thing. This is an ongoing issue. As a result, once the QCEW data comes out, which is the actual data, the figures have been sharply revised downward. Now, before Friday, the latest data from April of 24 to March of 24 showed the BLS overstated jobs by 52%. 52%. But on Friday, the Q2 data was released, showing the job growth from July of 24 to June of 25, and the revisions that got substantially worse. So from Q2 24 to Q2 25, the BLS reported initially there were 1.923 million jobs created. They revised those figures themselves within the subsequent 2 months. Those are those revisions we get, um, by about 1.534 million. But hold on to your hats. The QCEW just showed the actual amount of jobs created from Q2 24 to Q2 25 was only 420,000, which means the BLS overstated jobs by an astounding 1.503 million, or 78% from their originally reported figures. And 1.114 million of those numbers came from the birth death model. So the overstatement is just astonishingly getting worse. The number of jobs created through the birth death model, like I said, was the 114, which is almost exactly to the number what the overstatement the QCEW showed. So it just shows how the BLS is just so far off. When we look at everything, the BLS figures compared to the QCEW numbers, according to the QCEW report from January to June of 25, there were only 28,000 jobs created. But the labor market has gotten substantially weaker since then, with the unemployment rising 4.1 to 4.6% in November. And since June, the birth death model has accounted for 611,000 jobs, or 122,000 per month. Now, based on this data showing last report, they were overstated by 78%. These will almost certainly get revised downwards substantially. Now, until the last few months, the Fed Chair Powell thought the labor market was solid, but he has recently changed his tune. Maybe they got this sneak peek at this data. Austin Goolsbee said most job measures are stable, which is why he dissented from the last meeting. How he could say this is stable is very, very intriguing and confusing. Beth Hammock, who will be a voting member next year, said the labor market is softening, but not too bad. Really, not too bad when numbers from their initial report are overstated by 78%. Larry Schmidt, the other dissenter, said the labor market is in good balance. Don't know how we can say they're in good balance, but wow. So it just shows how off multiple of the Fed members have been regarding this data. Now we're seeing the 10-year Treasury spike back up to 4.20. And in addition, we're in Christmas week. We have limited trading, and a lot of traders hedge their bets. So that's why we usually see some upward pressure during the extended holiday season. We'll keep watch of this. Give us a call. We're working over the holiday. Like I said, we've already got one offer in. Give us a call. It's a great time to buy because you have less competition out there. Give us a call, 616-293-2189. Hope everybody has an exciting Festivus. Take care, everybody.